Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Tuesday, November 29th. Jen Amos is off today. Stocks on Wall Street are set to build on yesterday's big gains. The Dow rallied nearly 300 points, posting its strongest day in more than a month, on hopes that European leaders are planning to take steps to stop the spread of the sovereign debt crisis. Those hopes continue to lift global equities today, but U.S. stock futures are off their earlier highs, after the parent of American Airlines filed for bankruptcy protection. AMR said its operations will continue as normal as it reorganizes under Chapter 11, and that it has more than $4 billion of cash on hand to ensure that it can pay vendors on time. Shares of AMR are tumbling 60% on the news. Another big stock decliner ahead of the opening bell is Tiffany & Company, down nearly 7%. Fiscal third quarter profit at the jeweler climbed 63% on solid sales growth across all regions of the world. Tiffany also raised its earnings forecast for the full year, but said that its bottom line in the current quarter will fall short of analyst estimates. Meanwhile, Transocean is falling 5%. The firm will offer 26 million shares to partially refinance its acquisition of Aker Drilling. Despite those declines, investors seem to be feeling some relief this morning. That's because Fitch Ratings maintained its AAA credit rating on the U.S. government debt. However, Fitch did lower its outlook from stable to negative, saying that it's losing confidence in lawmakers to enact timely fiscal measures to lower the deficit. While the U.S. debt situation garners attention from investors and rating agencies, the focus of the credit crisis continues to be Europe. The region's finance ministers are meeting today in Brussels to finalize plans to increase the powers of the Eurozone bailout fund. But ahead of that meeting, Italy's borrowing costs continue to surge. And the UK's Chancellor of the Exchequer, George Osborne, said that much of Europe is heading into a recession. Britain's Office of Budget Responsibility lowered its growth forecast for the country for this year and next, but said that the UK will avoid its own recession. On the US economic calendar, we have a reading of home prices in 20 major cities. I'll bring you the results of that Case-Shiller report after the opening bell. Then later this morning, the Conference Board will issue its gauge of consumer confidence for November. It's expected to rebound a bit, following a big decline in October. And finally, there may be a big IPO in the works. The Wall Street Journal reports that Facebook is targeting the first half of next year for an initial public offering of its stock. The social networking firm reportedly wants to raise $10 billion in an IPO that could value the company at more than $100 billion. By comparison, Google's debut in 2004 valued that company at less than $27 billion, but its market capitalization is around $185 billion today. That's the latest from Weiss Research. I'll be back after the opening bell with all the market reaction.